trade February week 4. We are now at the end of the month. This is our last week to trade the month of February. We will be in March the week after this one. All trades that go on through Wednesday of this week, stock trades, will settle in the month of February. The trades that happen on Thursday and Friday of this week will settle in March. Now, this week we had the GameStop hearing that caused this meltdown in the overall market during the final week of January, when funds were forced to liquidate some of their longs in order to pay their margin calls on and put up more collateral for their their short positions that they had on GameStop that they were involved in. And so this week we heard from the participants that the Congress wanted to talk to in that. And in their prepared statements and throughout the trial, it sort of gave the market hope that maybe we're going to reduce that settlement time from T+2 to maybe, and once upon a time it was T+3. It only went down to T+2, I think, in 2017. And that was a big reason why the market has been so strong and rallied since 2017, is because it has a little bit more flexibility and freedom in settlement time. Well, through this trial, they're talking about zero settlement time, or at least reducing it to T+1. In which case, going into next week, if it was only T+1, then all the trades through Thursday would settle in February, and only those trades on Friday. And that would be the case throughout most months. Only those trades on that Friday would be the ones that settle in March. So that's one of the reasons why we were able to rally in the face of what was going on during that trial. We made an all-time high this week on Monday. Coming in, we gapped up open, but we blew it and didn't make our all-time closing high. We came back Tuesday, tried to make that get in there and make that new all-time high and that new all-time closing high, but failed there, and we've rolled over since. And Friday, at the end of the day, the market on close was 1.4 billion to buy, and that was a revision up from 1.3 billion in the early market on close. But yet the market really melted down at the end of the day. So as we're going into next week, there's clearly a rebalance that we're looking towards, and that's probably why we saw so much liquidation towards the end of the week as pension funds and so forth have to rebalance between stocks and bonds. And we saw the 10-year continually rising. And financial media keeps pointing to that as like this inflation thing, but really probably what it is just a factor of rebalancing. And if that's all it turns out to be, maybe we're going to see some continued weakness in February week 4, and then come back March week 1 and be back in the rally mode again. So here is our roadmap. Here is our low for 2021, all the way over on the far left side here. First trading day of the year was this huge meltdown. We rallied up to a new all-time high at the end of January and rolled over in that final week and came down, but held a very clear higher low. So if we're going to repeat this pattern, seeing how we've rallied the whole month of February, but rolling over at the very end, maybe if we're going to continue to sell like we saw in the final week of January here, we want to see a higher low held against here, because this sell-off, all this was about was that GameStop short squeeze and people having to raise funds to cover that and produce more collateral for those short bets. So if all we're going to do is just do a little rebalancing and an end of month sell-off, we definitely want to see this low from February hold. So to get there, we've got a couple of gaps. We've got a little gap here, a bigger gap here, and then a really big gap here. And we would still be holding above the February low. So let's take a look at the roadmap in a little closer view that's a little easier to read. And this is the view that I usually show you each day, posting intraday updates to what this roadmap looks like. So on Monday, if we're going to continue the selling, we want to come in and see this 10-day still be broken. After we broke this intraday on Friday, we were really unable to ever regain it the rest of the day. So we want to come in, and if we want to see continued selling and buy some puts and make some money on the short side next week, we want to see us open below that 10-day simple moving average, break Friday's low, and continue on down to another visit to this 38.86 level. The last 2 weeks in a row, February week 3 and February week 2, the lows for the week took a little tiny look below this 38.86 level and reversed. 38.8494, 38.8503. If all we're going to do is come down and make another higher low against this one, look out, we're going to reverse and we're going to head back up again, but maybe get stuck another day at the 10-day and kind of vacillate in here and then move up. But if we do break this 38.86 with some power this time, I think at minimum we will take the move from the all-time high to here and double that down. And this is the target that I gave you last week. Times 2 down would get us to 38.22. So that would get these two, this small gap would break the 20-day. It would fill this little bit bigger gap and look below it, but maybe reverse above this January 20th inauguration day level that you can see looking back here with some support and resistance going on in here at this level, 38.16. So we would hold the low 3800s. But if that target isn't enough to feed the beast and we go down further, then we're looking to this big gap where the 50-day simple moving average is rising up to, and at this point we will be 4% off the all-time high when we get down and look below 3800 to about 37.92. Here comes our 50-day. That's going to be right in there. There's going to be a lot of stuff piled up here at this 37.90 level. As long as we hold this 37.90, we probably consolidate for a while and move back up. If we break this, then we've got this bigger gap to fill to the first trading day of February, the February 1st close at 37.73 and change. And then we start getting into testing that first trading day of February and holding, and the opportunity to hold another higher low against this one that we made at the end of January. And at that point, 5% off the all-time high would get us down to 37.53. That would also be a nice, clean 200-point move off of the all-time high. That's the kind of thing that fund managers who are rebalancing their portfolios are looking for to get back into those stocks they just rebalanced out of. So if this is a move that doesn't happen as quickly as this one, if this drags out all the way to the end of the week, like this one did, maybe we're going to finally see down here by Friday, and you want to be buying some calls for the following week if we get all the way down here. You don't want to continue pressing your bets short because there's not a lot of interest in so far this year in the market to get us below this 3,700 handle. Okay, let's take one more look at our a little bit more simplified daily chart, the one that we use to really monitor more so for just focusing on the SMAs. And here you can see here would be the 20-day and the 50-day, and then getting down to that area where the February 1st range was trading. At any rate, we're also looking at this chart for more upside. Next week, this median line, which I don't think we'll be trading back up to next week, but if by chance we were, it's running 39.7250 to 39.95 by Friday. So if you understand where I'm going from here, when we get into that first trading week of March, this median line is going to be rising over 4,000. And look to the left, every single all-time high that we've made since putting in this third plot point at the November low for this bull fork, you can see here all the highs rise up above this median line, maybe only for a few days to fall back. But at that point, that's how we're going to get to 4,000, is when this median line rises over that. Maybe that's criteria that's being fed to the algos. That's what's going to cause a buy program down here. And the idea is going to be moving up towards this median line. It'll be above 4,000 by the first or second trading day of March. So let's think about that. That's where we'll be going. We've got to get this correction down 200 points to around 37.50, and then we're going to be looking for a move 250 points, maybe 350 points up. Maybe we're going to 4,100 before the end of March. Okay, that's it. Have a great rest of your Sunday. As always, good luck and good trading.